Bill, Lalit, good morning. How are you? All right, let's start. Welcome to Tradespoon and Yellow Tunnel. My name is Vlad Karpel. I'm CEO and founder of both companies. Today we're going to have a live trading room open to trade stock and options using our technology. For those of you who are new, welcome. If this is your first live event, do me a favor, type in first. Always want to welcome new subscribers. For those of you who are on the YouTube, welcome. Please subscribe to our channel. Really appreciate your attending. This is my brief bio for those of you who are new. I was executive vice president and head of technology at several fintech companies here in Chicago. When the company went public, decided to manage my own money, build a team of financial engineers to help find the opportunities in the market to trade stock and options. Disclosures are very important. Please read them. Trading stock and options does involve risk. Not suitable for everyone. If you're new to trading stock or options, I encourage you to visit optionscreening.com so you can understand the risk associated with trading stock or options. It also should not be assumed that the future trade picks will be profitable or will equal past performance, and you can always pause the screen if you need more time to read the disclosures. All right, very important trading psychology to keep a journal and have a trading plan. Part of the trading plan, you write down the rules, right, and the process of how you trade, so you can give it to somebody else and then they can repeat the trades, right? So from my perspective, Excel spreadsheet is very important where you list all of your trades, right? You would put down all your trades and have a checklist, right? In the checklist, we're going to go over the drawdown, which is negative, positive, negative visualization. The economy of control basically says process is more important than the outcome. First check is cash, right? I propose 30% of the portfolio on average to be in cash. Portfolio drawdown, number of positions times position size. That's the most important when it comes to risk management, right? So number of positions 4, I propose if you're new to trading, limited to 4 positions, and maximum exposure is 2.5% of account value per position. How do you determine 2.5%? There are other checklists here I put down. If I think it's important to be long and short the market at the same time, right? I think market is in strong uptrend. We are consolidating, we are pulling back, so you can have majority. If you're bullish and you think we're in a strong uptrend, then okay, you have more bullish positions than bearish. If you think the pullback is gonna accelerate, okay, then you can have more bearish position than bullish. But since you don't know the next move in the market at any given time, it's important to trade spreads, right, or cover calls, or if you're not trading options, try to hedge with inverse ETFs, for example, right? Or commodities if you see that commodities are in strong trend. But something that will go up if the stock market will go down, right? SH, PSQ, inverse ETFs is something that I use periodically. All right. So let's go over current levels and see. So again, earnings season is for the most part behind us, right? I mean, there's always earnings every day. There's always earnings, but for the most part, it's not going to probably impact the market as much as before. So let's look at interest rates. So the only thing, not the only thing, but there's still a very high correlation between interest rates and the market, right? And we have a very similar situation as last year, right? Last year during summer, it was the conversation about how persistent is the inflation, how long interest rates will be elevated. Do we have rate cuts or do we have rate hikes, and when will the Fed cut rates? So now that NVIDIA earnings are over, we are kind of driven by macroeconomic news. Yesterday, when the data comes in better than expected, right? So yesterday we had consumer confidence, right? We had consumer confidence. We had Neil Kashahari speak. I'm not sure if the consumer confidence, because the consumer confidence, was better than expected, or because Neil Kashahari said that rate cuts, there's uncertainty and potentially a rate hike is still on the table. But in either event, rates were oversold, right? We hit 200-day moving average. They were oversold below 50-day moving average, below 200-day moving average, and now they're above the 4.50 interest rates. And next level is 4.7, right? 4.7. And that's when we had 5% pullback, right? When it happened in April, when it happened in last October, we had 10% pullback. So I think it's the same thing, right? The higher the rates are going, the steeper the pullback. From chart perspective, from this channel perspective, I don't think we're going to get much further than 4.7, 4.5, because nothing has really changed, right? This is, I think, just people reacting to this news short term, but the story hasn't changed, right? Powell still says there are going to be rate cuts at some point this year. So I think this is, temporary kind of consolidation. And you can see in terms of value stocks, they are down, right? So anything but technology, kind of a classical double top, marginal breakout, but false breakout. And now we have a steep pullback continuation. We're trading below 50-day moving average, right? At least as of, for 2 days. We'll see where we're going to close. Next jump 450. We spent there for a couple of weeks, and now we are retracing back. And 450 on QQQ would be important support level, right? And we're 1% away. As long as we're above 450, I think this is just a healthy, couple percent pullback, not a big deal. If we do drop below 450, then I think we could, next level will be 50-day moving average, and that could be a more meaningful pullback, potentially revisiting the April lows. In terms of spiders, similar picture to QQQ, right? We broke decisively above 425. In terms of positioning, we see 425 has been very strong support. If we don't hold that level, there's really no positioning until 512, 50-day moving average, right? 510, 515 level. The positioning is at 510. So that's your support number one. That's your support number two, right? If you think interest rates are getting to be overbought right now and we're going to have a pullback and you're bullish on the market, for day trading, we're at 525, right? So 525, I would still use 520, right? If we drop below 520, there's some positioning at 520. We'll look at it. So that would be my support number one, right? 1%, 5 points. So I would use 1% as your stop loss if you're doing day trading, and I would use 15 points if you're doing longer term trading, right? Because if the 510 doesn't hold, if the 50-day moving average doesn't hold, potentially we could revisit April lows, right? So at this point, it's it's hard to say, right? It could be a sell and main go away kind of from the seasonality point of view. It didn't work out last year or past couple of years. June and July were actually pretty strong. So that would be my thought process, right? So you use 1% stop loss or 3% stop loss if you're doing longer term trading. And you take $250 and divide it by 5 or divided by 15. So any questions on how to determine position size? And then I would use this as a basically, for any position, we'll go through the same process, right? And the idea is to have 4 positions, not risk more than 2.5%. And even if pullback, if we revisit April lows or we really revisit 2024 lows, you have, your maximum drawdown cannot be more than 10%. So, but for now, as long as the QQQ and spiders are holding their breakout level and the support levels, bulls are in control. I mean, obviously, hello, Kirill, how are you? Chuck, Chewy earnings were good, great, thank you. Yes, so thank you, Bob. Energy, right? So there's acquisition. ConocoPhillips bought Marathon, MRO, Marathon Oil. Fowles, good morning. Welcome back. Jerry Blossom, welcome back. Where's Mark? All right, let's look at the support. So spiders are down 80 basis points to 525. 525 we saw this Friday. I think 525, 520 should hold, right? So between now and Friday, I think bulls will probably start stepping in soon. Let's see that. Let's look at the positioning. So while it loads, let's look at first stock forecast toolbox. So support is 527, overhead resistance 531. Neutral trend model sees that potentially we could reach 523, right? And on the upside 530. So in the next 10 days, model sees 520 to 530 is the range, right? 520 to 530, right? The jump on the inflation data, May 15th, inflation CPI data drop, and we had a pretty sharp rally. Now we basically gave up. We're trading at that session open price and trying to close the gap. Right, so let's switch to 1 hour so you can see it better. Right, so that's the gap, right? The May 15th gap. And we're trading right at that session open price, 525. Just double check positioning. So now I'm looking at the dealer exposure, and I'm looking where is the highest open interest. And we talked about between today and Friday, relatively large position is at 520. 520. So we're at 525. Doesn't look like there is much support at 525 right now. Yeah, so next level is 520. So it's important for the market to hold the 520 level. If you zoom into June expiration, monthly expiration in terms of comparable quantities in June, next level would be 510. There's really, after this Friday expiration, which is in 2 days, there's really no position up until 510. So that sets up kind of a vulnerable, market is vulnerable. So that's positioning. Value stocks continue to underperform, continue to drop, and you see Dow DIA is also continues to drop, right? So I think now that the Dow Jones and value stocks are below 50-day moving average, VTV is dropping below 50-day moving average, basically on its way to retest April lows, not that far. And DIA is similar, kind of right at the 50-day moving average, now below, not that far from the April lows. So everything except, your technology companies like NVIDIA, Microsoft and Google's of the world, everything else, majority of the value stocks are approaching April lows. So I think it makes sense to hedge. Yesterday, at the closing bell, I did put on a hedge. If you don't have any hedges, I would consider maybe putting on a hedge, right? 340, 380 put spread. Let me look at the price. So because of NVIDIA, right? I think technology is still outperforming. They're above breakout levels, so at least technology short-term holding on to most of its gains. But DIA is weak and below 50-day moving average. So yesterday I bought 390, 380 put. I bought it at $3.30, right? It's currently trading at around $4, 380, $4, 380. So that gives you a hedge, maximum profit $7, right? $7. So it's a $10 spread. You are hedged. One contract $7, right? And about 2% hedges. Obviously, one contract is $39,000. So out of 4 positions, I would make, if you have $10,000 account, out of 4 positions, I would have this as one contract, right, to hedge your $10,000 portfolio. I mean, we have several bullish positions. We need to review them now, but that would be my proposal for the hedge. Made good money off them in the past. All right, Bob. Yeah, MRO was a good stock. We had a lot of signals on MRO. So good news. In terms of NVIDIA, so NVIDIA is starting to pull back as well. Bitcoin is slightly down 1%. Crude oil, so we do have rebound in crude oil. So NVIDIA pulled back, crude oil down 0.5%. And interest-sensitive stocks are like semiconductors down 2%, Spiders down 80 basis points. IWM looks weak. It's dropping below 50-day moving average, and KRE looks like, pretty sharp pullback in regional banks and staying at the 50-day moving average. All right, so KRE 55.50 call, it dropped. I'm gonna close the trade. It's down more than 50%. So let's see, 55 cents. $0.55. Again, false breakout. I thought interest rates will be stable, but didn't work out that well. So let's see, 50. Okay, so I'm out of KRE. I mean, this is the July position, but right now, then the time would be against me, and the spread will continue to deteriorate in price. So usually I use 50% stop loss. Sometimes you can't catch it like on 2 days and sharp pullback, but that would be my thought process. So let's say close. All right, so if you're in the lead circle today, I'm out of carry. All right, let's look at other positions. Let's review them. Let's look at Amazon. So June positions, I mean, July positions are also important, if you have such a sharp pullback. Amazon for now is still holding on to 50-day moving average. Looks like it's outperforming the rest of the market, at least as of right now. So for now, I'm still long Amazon. Probably similar level that I bought. We talked about, let's see. So you can find some of these positions in sorry, so Amazon, I'm not sure if you saw it, but Amazon staying at the 50-day moving average. For now, it's outperforming the market, so I'm gonna wait and see how sharp is the pullback. Well, basically QQQ will QQQ and spiders hold to the 250. For spiders, 520, 525 level. Right now, it is a vulnerable setup, so it could break through this level, but we'll have to wait. So you can see these orders in KRE, right? KRE, and I trimmed Netflix position yesterday. So those are the positions on Dynamic Power Trader, on Yellow Tunnel, and on Tradespoon. You kind of can see all the positions at the same time. KRE, right? So I have an order to close DIA for $6.30, and I just got out of KRE. So that's Amazon KRE. Let's look at FXI. FXI is a stock, right? Stock, you don't have to be correct on timing. You could be off on timing a little bit. Same thing, it's consolidating. It's down 2%. Drop below this level. You do have a crossover of 50-day moving average and 200-day moving average. It's still in strong uptrend. So for now, I'm just waiting to see what happens on FXI. So I do have a stock position. Could buy a put. Maybe that's what I'm gonna do. So let's FXI option. I'm gonna go into July. Let's see. So next 27 put is 80. So I'll buy 26 put. Spend maybe 2% of underlying stock price. So if you have, 50 shares or more, 100 shares of FXI, it makes sense to buy a put, right? So at least, you don't know where it did break through this overhead resistance to the upside. Now it broke below. It could, next level is basically 50-day moving average, right? Somewhere between 50-day and 200-day moving average. Let's see how if FXI is, how well it's positioned. So let's go to June 21 and July. So yeah, most of the price actions is in calls, right? Demand for calls. You have these calendar spreads, but for puts, there's really no hedges. Like nobody's hedging FXI. So that's not good, right? So that means it is a vulnerable setup where it could drop. So I think it makes sense to buy a put. All right, so I bought a put on FXI. Let's continue on. Goldman Sachs. Let's see how's Goldman Sachs looking. Still in strong uptrend, but it is pulling back. You know, I don't have 100 shares. It's expensive stock. So at this point, I'm just gonna down 2%, maybe close Goldman Sachs as well. Or at least wait if 525 will not hold. So I'm just gonna wait for now. So Spiders is at 525, Goldman Sachs is a stock. I have time, it's in strong uptrend, so I'll leave it alone. And then maybe wait to see if the 525 to 520 level will hold. If it doesn't, then I know it will drop another 3%, close the position. Netflix. Continues to outperform the market. It's at all-time high, trying to actually break out. At this point, I'm up 1% on Netflix. I did trim the position. I have a small position left, so I'll leave it alone. So I have silver. We had a strong rally in silver. Again, silver kind of sometimes correlated to interest rates, sometimes not. All right, it's kind of been diverting, but you know, it kind of continues to make new highs, right? So it's at 29. I trimmed the position. I would be a buyer into pullbacks on silver. So I would look at this level, 91 level. For now, it's holding on, but again, if it doesn't hold this level, it could drop to 200-day moving average, another 2 to 3%. So for now, I'm waiting on XLE. And then I have spreads in Texas Instruments and Wells. I'm also approaching 50% stop loss. So Wells Fargo, similar situation as Goldman Sachs. It's traded below 50-day moving average. It's right at this breakout level. For now, I'm going to wait for spiders to see if the 250, if that level will or will not hold, right? If the buyers will step in. If not, then, you know, I'm close to 50% stop loss, so makes sense to close Wells Fargo as well, just not all today. And then Texas Instrument, I mean, very strong uptrend. It's pulling back. I mean, it's a July position for now. I'm just going to hold on to it. Raymond, yes. So Wells Fargo is approaching 50% stop loss. So for now, I mean, I don't want to close all the position. Like KRE is down more than 50%. You know, then doesn't matter even if spiders doesn't hold. You know, the time is against me. Wells Fargo is close to 50% stop loss, but we also have a very strong support right now, right? 525, 520. So I'm going to wait and see if the 525, 520 will or will not hold. Because buyers could step in at 525, right? Or at least till Friday, right? I think I have time till Friday to decide. After Friday, if we're trading below this breakout level, then it's very hard to there's a very high correlation between most of the stocks. I mean, you do have exceptions like Nvidia, maybe. Well, even Nvidia is down 2%, right? So I'm not sure if there's anything in green. Yeah, there's nothing. Home builders are down, right? Home builders are trading below 50-day moving average, right? They're basically revisiting the April lows. Materials below 50-day moving average. Metals and miners are strong, right? We talk about metals and miners. China, right? FXI is down 2%, but still above 50-day moving average, so that's strong. Let's see, VNQ is down, right? REITs are down almost 1.5%, approaching April lows. Healthcare is down 1.5%, approaching April lows. Consumer discretionary down 0.5%. Transportations are extremely weak, right? So exportation actually below April-May low. So transportation already broke through the support. Kind of a broad-based pullback spiders. So we'll see if the spiders will hold or if the sell-off will accelerate. Yeah, so Dick's Sporting Group had earnings very strong, right? So people are still going outdoors and shopping, up 16%. Strong move in Dick's Sporting Goods and strong price action in Abercrombie and Fitch, also up 15%. So today, retail stocks are actually doing, Dick's Sporting Group and Abercrombie and Fitch, 2 standard deviation moves, right? 2 standard deviation moves to the upside, despite down day. And then Chewy, I think also had Chewy had a strong earnings, up 21%. All right, any questions? All right, let's look at earnings, see if there's, I think CRM is announcing earnings May 28th. Let's see, Tuesday. All right, so May 29th. Okay, so yeah, CRM aftermarket close, Okta aftermarket close, HPQ. And then tomorrow, before market opened, Best Buy, Kohl's, Dollar General. We have Dell tomorrow and MongoDB. So let's look at CRM. Let's look at CRM. participating in this AI 50-day moving average is kind of trading right at April lows, going into the earnings. But it did have a strong reaction to earnings last in both November and February earnings. So let's see how people are positioned in terms of CRM. So it's a $270 stock, right? So selling premium, I think, could be an issue because if you're off by 1 or 2%, that could be $500. Let's see. I mean, you do have call skew, so there are people, at least in July, they are buying calls, right? 300, 320 calls, and in large quantities, and they're hedging with the June expiration. So it looks like the largest position is around $300 level, which implies 10% move, right? So let's see, CRM. So we have largest position, I would say 300 level. And based on history, I mean, CRM can move as much as 20%. So it could get to 300, and the next level, it could get position all the way to 330. So historically, it could move as high as 330. Let's look at the CRM. How much did it move here? Sun. And close my browsers. Cherry Blossom, all right. So, Cherry Blossom, thank you. See, close. For some reason my Chrome is slow, so just give me a second. Meanwhile, just let me know if you guys have any questions. All right, let's see. Chrome. Let's see if this is better. How's the market doing? So recovering a little bit. QQQ is down 0.5% now. Spiders are down 65 basis points. So it looks like 525 for now is holding. Let's see, CRM. $15. It's about 15%. It's been moving. So 15 current price is $270. So 300, maybe 315. And then open interest on the downside. The highest interest is at 250, which implies maybe 10% move, a little bit less. Doesn't look like there's any strikes actually below 250. It's interesting. And then let's see in terms of tunnel. Okay. So let's go to chains. Enter symbol. So straight into 270, you basically add, for one standard deviation, people, you just do a straddle, right? So that's about 9 plus 9, 18. And then that's one standard deviation, and then you add 18 plus 7, 25, 33. So $33 is the 300 level, right? 15 plus 18. Roughly 8 plus 9, 9 plus 9, 18 plus 7, 25. 25 plus 8 is about $33. So a little bit further than 300 level. So let's see how much premium is in these options. So selling premium, I mean, mostly it is outside the front months, outside the weeklies, right? Outside of the weeklies, the volatility skew, right? The vol skew is below 50. So that implies that people are bullish and buying a lot of calls. I mean, it's hedged, right? It's a calendar spread, but there's still more demand for calls than puts. So it could gravitate over these levels, right? Or it could gravitate over this. So I probably would buy butterfly. So this is the vol skew, sorry, below 50. Right, so the vol skew is below 50. and further out. So that means that there is a demand for long calls. So it could probably move at least one standard deviation to the upside or to the downside. So let's take a look how much these spreads worth. All right. So if I buy, so the butterfly, right? If I want to be long the vol, I would buy 300, say sell 315 and 330, right? With the idea to cover this range, right? Because if there is a bullish, if they mention AI and actually they're benefiting from AI sales force, then you could have this 300 to 350 move. See how much is it worth. So 70 cents, right? 70 cents, it's 20 basis points, right? So you can place this trade for 70 cents. Downside, I mean, you are hedged here to 50, right? To 50 strike. When the stock is weak, then you would have to do the same thing, right? So let's do. So 1 to 2 to 1. You can probably do it. The call butterfly for 70 cents and put butterfly for 70 cents. So that will be $1.50. So it's about 0.5% of underlying stock. Let's see if there's anything cheaper we can do. That's also earning calendars. So that's Salesforce. Right, let me just write that down. Implied move is 33, so 305. 40. Yeah, and just while we were talking, Netflix did get filled. So I'm out of Netflix position, got filled at 657.20. Okta is also not good. HPQ. So we do have HPQ. Let's look at HPQ. It's the 30, it's a cheaper stock. Looks much stronger than CRM, right? Strong uptrend. It could get volatile right here. It dropped around 10%. So it could drop, up to 10% historically. And let's see if the volatility skews. Right, the question is, do you want to be long volatility and buy debits spreads, or do you want to sell the volatility? So this looks a little bit different, right? You have majority is above 0.50, right? So it looks like well hedged position. Most people are selling 35 call, right? So the current price is at 33. People selling 35 call, people selling 30 put. 35 is the largest. Here, the largest is 31. 31. Historical move could move up to 10%. So we'll do also 35, 31, up to 10%, 6 to 10%. And let's look at the implied volatility. I just make sure it announces earnings after the close. Yeah, today after the close. Okay. So HPQ trading at $32, right? That's the 31 strike. 2 standard deviation would be $2, $3, $4. Right. So two standard deviation would seems like a lot of volatility. May 31st. HPQ 33, so $1, $2, $3, $4. Okay, so the implied volatility is actually 2 standard deviation would be $4, which would take you implied volatility to 37 and 29. So here, unlike CRM, I'm more inclined to sell premium because the volatility skew is greater than 0.5 strike. So 45 cents, right? So there is a lot of volatility in the name. So 37 is 17 cents. So if I sell 37, there's really a lot of demand. Yeah, so I can sell 37, 39 and receive 12 cents. So I'm inclined to do that. All right, let's just make sure that yellow tunnel has this. Yeah, HPQ is part of it. So we do have HPQ. All right. So trade option HPQ. Vertical. What do we say? $2, $2.50. Yeah, 2. So let's do $2 strike. So 37.39. 37.39. Spread, I can sell it. Let's see, can I get 10 cents? Last sale is at 9 cents. Let's see, 10 cents. Risking $2, made 10 cents, right? So what is it? 5%, right? One contract, I'm risking $200 to make $10, right? So return on investment is 5%, which is pretty good. But it has to stay, it has to stay within this range, right? It has to stay within this range. And looks like it's going to gravitate over 35 strike. Okay. And like you could do the same thing on the downside, right? I mean, I don't have a strong opinion how it looks like a strong stock, but it could drop back to this 31 level. So trade option HPQ, let's do the same thing. Let's do vertical. $2 strike interval. And we're gonna sell 10 cents. So let's see, 30 strike. 30 strike would be 50-day moving average. 30 strike. Let's see. What's this guy? So there's not really much outside. Well, there's 27, but it looks like 30 people are selling 30. Okay. So 28.30 sell to open, one contract for, let's see, 12 cents. 11 cents. Okay. So that would be my view. So the problem with CRM, I would do butterfly, right? Because there's a lot of demand, right? And ADI, we did have a strong move to the upside, but there were strong stocks. CRM, it could be a large, it could be a $300 stock. I mean, it could be $250 stock. So it just all depends. I mean, it doesn't look very strong, so probably risk is to the downside. But you would have to spend, $150, right, if you're doing one contract on that butterfly. The advantages of the HPQ, much lower strike. Here, if you do one contract, you're risking $20. Oh, sorry, you're risking $180. So you're within the 2.5%. Within the 2.5%. And if it does work out, if you can make $20 on $2,000 investment, well, that's 10%, right? 200, right? To strike $200 risk, 20, so 180, right? The maximum risk is $180. The maximum gain is $20, so it's a little bit more than 10% gain overnight. So that's that would be a good return. Chuck, Beth, thank you. Kirill, thank you. All right, it's 9:20. Thank you very much. Have a great day. I will see. Scott is doing closing bell today, and then I'm going to do the closing bell tomorrow. Thank you very much, and have a great day.